Good morning, everyone, and welcome to today's Audit Committee meeting on June 24th, 2024. Individuals interested in participating in today's meeting were eligible to register online using the delegation registration form at www.kitchener.ca/delegation or via email at delegation@kitchener.ca. Any written comments received prior to the commencement of this morning's meeting have been circulated to members of council prior to the meeting and will form part of the public record. The meeting live stream and archive videos are available at www.kitchener.ca/watchnow. Are there any disclosures of pecuniary interest? There being none, we'll move right into status updates, and we will begin with Ms. Tasker and the second quarter audit status report.
Great. Thank you. Good morning, everyone. So today I'm going to be giving you updates on four things. The first one being external billable work orders process review, and then three status updates on audits that I've done in the past, specifically the parking and mileage audit, underground locates, and technology field inventory. So we'll kick things off with the external billable work orders. So I'll just start with a bit of a definition so that you know what I'm talking about. When any city crews perform work such as repairing roads or trimming grass or whatnot, they'll fill out a work order in a system called CityWorks, which allows them to collect the labor, equipment, and material costs and allocate them against the task. So most of the work that we perform is considered to be internal billable or non-billable, meaning that it's covered by either the tax base or through utility rates. There are some types of work, however, for which we bill the end customer directly. These things include things like sewer blockages on private property, gas or water main hits that are caused by developers, or road closures required for private events or development activities, just to name a few. The charges for these external billables are sometimes a flat fee and sometimes are based on labor and material costs. However, regardless of the method, all of the fees are laid out in the fees and charges schedule that is approved by council each year. So recently, staff had completed a high-level review of the external billables process, which resulted in a number of recommendations. One of those recommendations was for me to come and do a deeper dive into the external billables intake process to see if there's a more efficient, effective, and accurate method of gathering the invoicing information. And this would help to facilitate more timely and accurate billings for the end customer. The scope of this review starts with when a service request comes in, all the way until the work order is complete, which is when the invoicing details are transferred to the revenue division through SAP for billing. It did not include the back-end process completed by the revenue staff to actually send out the invoices. The review followed a typical methodology for a lean review, including interviews with all of the stakeholders or participants in the process, a review of the previous recommendations, and a review of the examples of work orders that had rework or errors. We did data collection over several weeks to determine the most frequent types of errors and rework, and we did some current state mapping for each of the services that has external billables. We then did some problem identification and root cause analysis, solution generation through brainstorming, implementation planning, including one Kaizen event where the group provided feedback on a mock-up of some system changes, and finally a project closeout meeting where the team discussed lessons learned and next steps. So each external billable service type has a slightly different process, including who performs each step and where the data comes from. However, they all have these same basic macro steps in common. The process starts with the initial contact with the customer. And customers could be the owner or the tenant of a property, a contractor or developer, or a perpetrator, such as someone responsible for running over a street sign or causing a water main break. At this initial stage, information for the work that's required is gathered and input into a service request in CityWorks, including what address the work is to occur at and what needs to be done. Ideally, information about the customer, such as their customer number and billing address, should be gathered at this time. However, this is not always the case. It's sometimes difficult to know who should be invoiced, and the responsibility for ensuring the information is input is not clear. A work order is then created, also in CityWorks, and linked to the service request, which details the work actually performed, including labor and equipment hours and any materials used. Once the work is complete and all costs are finalized, the work order status can be changed to complete status, which then triggers a transfer over to SAP so that the invoicing can be completed. So in order to make this happen, the service request and the work order must have an external billable flag marked in 3 places, a correct and complete owner name and address, a customer number that matches in SAP, and an amount that's greater than 0. So if all these things happen, then the invoice will flow smoothly. What we found, though, during our review was that there are three main issues that prevent the correct data from flowing smoothly to CityWorks, from CityWorks to SAP. So first, there's a gap in staff knowledge in terms of who's responsible for gathering the customer information, how best to search for the correct customer number, and when the work is deemed to be complete and ready to bill. Second, there's technical limitations in CityWorks. The ability to send data to for billing is linked to the CityWorks status, which must be set to complete, meaning that all of the labor, machine, and material costs are also complete, regardless of whether the service type is a flat fee or not. In addition, there are multiple screens that the staff must flip between in order to input the required billing information. The billable flag, as I mentioned, must be checked off manually in 3 different spots within the service request and the work order. Otherwise, the work order will automatically close after a certain time period, preventing billing from happening. And third, since the process varies slightly between service types, it's unclear who to go to for questions about work orders, as there is no contact name field. So all of these issues have led to significant rework and wasted time for staff, as well as delayed and sometimes missing invoicing. So through the brainstorming workshops, the team was able to come up with several fairly simple solutions to address these problems. First, we documented which information each participant in the process is responsible for collecting and where to input it. In the past, there was misunderstanding of who would gather the customer information and an assumption that someone else was doing it. Second, we documented the business rules for each type of external billable so that the staff know whether they can bill immediately in the case of a flat fee billing, or whether they need to wait until all costs are complete and when that would be. Third, CityWorks staff will be providing training on the most efficient way to search in CityWorks for a customer number that matches to SAP. Fourth, staff are in the process of simplifying the CityWorks screen to have a single screen where all of the billing information resides so that staff don't have to continually flip between screens. Some of the information on the screen will be populated directly from the service request, and it will contain a contact field so that revenue staff know who to contact if they have questions. And finally, additional programming changes are being made to CityWorks, which will allow interim and flat fee billing, decoupling the ability to bill from the collection of costs on the work order. And we determined which types of service requests are external billable 90% of the time or more, and set them to billable by default, meaning that staff do not need to check the billable box and they won't close by accident. So by implementing these solutions, we anticipate a number of benefits, both for the customer and the corporation. First, there'll be significantly less rework for revenue and support services staff following up on incorrect information. The billing information should now be collected at the first point of contact for most service types. Specific roles and responsibilities will be communicated to all of the process participants, and all of the billing information will be accessible on one screen. So all of these will lead to more accurate and timely billing for the customer and no lost revenue. During our closeout meeting, we assigned action items to individual team members, and they are required to check in with me at the 1, 3, 6, and 12-month marks with a status update, which is a standard accountability framework for lean projects. So a formal status update report will be brought back to Audit Committee at the 12-month mark. Are there any questions about this review?
Any questions for Karina? You did such a good job, there don't appear to be any.
All right. I know it's riveting stuff, but try to stay awake. Now I'll present the 3 status updates that were done from audits that were done last year, the first of which is the compliance audit of employee parking and mileage expenses. So the objective of all 3 of the status updates is simply to check in on the status of the recommendations and hold staff accountable for addressing the audit findings. So the objective of this audit was to test for compliance with the city's parking and mileage reimbursement policies. The results of the original audit showed a few minor errors in mileage and parking claims that can be rectified with additional education of staff and management, and therefore there were only 3 recommendations at that time. One recommendation was related to periodically reminding staff of the mileage reimbursement rules, and this has been accomplished through an email reminder and is being incorporated into the Expense 101 training provided by accounting staff. The other 2 recommendations are now no longer required as they related to parking expense reimbursement, which is no longer applicable. So I don't have anything to report on this other than that the mileage component of it will remain on my list of rotating compliance audits. Does anyone have any questions on this one?
Any questions? There are. Councillor Chapman.
Yeah, thank you. It's somewhat removed from what your report provides, but I was wondering if the city has implemented alternatives to parking, like bus tickets or GRT, Grand River Transit passes or something to encourage staff to use other sources of transportation, other means of transportation.
I do recall something, but I maybe pass it over to Mr. Reedman.
Mr. Reedman?
Through the mayor, so we do participate in TravelWise, so there is a discounted transit pass program, and then we also provide secure bicycle parking, and we have a loan program for bicycles as well for employees who wish to purchase one.
Okay, thank you.
Those appear to be all the questions again.
All right. So the next status update relates to the capacity and org structure review that was done on the underground locate services for Ontario One Call. So the original objective was to identify compliance risks with the new Bill 93 legislation and offer recommendations to mitigate risk. The new legislation imposed strict timelines and associated penalties with conducting locate requests for the city-owned underground infrastructure, such as gas, water, sanitary, and stormwater assets. The analysis found that the city did not have sufficient capacity to complete the volume of locate requests within the legislated timeframes. So there were 24 recommendations in total, which focused mainly on increasing capacity to complete the work within legislated timeframes. But there were also other recommendations related to streamlining processes, providing more oversight and monitoring, and training for staff. While there was initially an urgency to create and fill the additional locator positions in order to avoid the fines and penalties, the provincial government actually delayed implementing the fines until May of this year, which was good news. It allowed the city to have more time to fill the new positions, given the difficulty in attracting qualified staff. All municipalities are facing the same challenges as we are, so the demand for these staff is quite high. In fact, 2 of the 7 approved positions are still vacant for this reason. Because they were waiting to hire the staff first before implementing some of the other recommendations, 5 are still in progress and 4 have not been started, including staff training and locate software utilization for sewer locates. So management will continue to attempt to fill the remaining vacancies, implement the remaining recommendations, and will continuously monitor compliance to ensure that we don't have any penalties. As of mid-June, I'm happy to report that the compliance rates were sitting at 100% for both gas and water and sewer locates. Are there any questions about this review?
Any questions on this one? Again,
Easy
you
peasy.
have been incredibly competent, Karina.
All right, last one. The third and final status update is the physical inventory count of technology field assets.
Sorry, Chair, before she starts, I can't hear her that well anymore.
Okay.
Can you hear me now?
Not really. You sound far from the mic, but
Maybe check the volumes on your settings as well.
Okay,
I hear you very clearly. Okay, you can continue, that's fine.
Yeah.
all right.
I know that is that mic is generally a problem from when I've joined virtually, and that's one of the reasons why after this meeting we'll be getting a new AV system. So with that, back to you, Karina.
All right. So the original audit was a physical inventory count of all of the laptops, desktops, monitors, printers, and docking stations that are deployed to staff to compare to our asset records. There were a total of 5 recommendations to improve the record keeping and to ensure the database is up to date. 1 is complete, while 2 are in progress and 2 are not started yet. Staff are in the process of implementing an asset management module and process to keep records up to date. They will also be using the updated list of assets to inform the 2025 budget process to appropriately charge divisions for the assets that they have. They have not shared the updated asset lists with divisions or implemented rotating cycle counts yet, as they're waiting for the asset management module implementation to be complete first. While it was impossible to tell from the original audit whether theft was the cause of missing assets or just poor record keeping, the inventory allowed us to create a new baseline. This, coupled with the new asset management database, will enable TIS staff to plan their technology refresh cycles for laptops, desktops, and monitors with more accurate asset information and improve customer service to their clients by ensuring that their assets are up to date and reliable. So this audit will remain on my rotating assurance audits, and a full physical inventory will be done again in 2028. Are there any questions?
There are. Councillor Johnson.
Thank you, Mr. Mayor, and through you. Thanks for this report. I'm wondering, as we look at different ways to save money, do we have every piece of equipment on kind of, you've had it for 3 years, whatever it happens to be, and so you're automatically going to have it replaced, or are we able to look at something where we can keep things longer, and if there's not a problem, that we replace it later? I'm wondering if you can just review that. I know it's there, but.
I can get back to you on that. I believe that they have a set refresh cycle, but I'm not sure how strictly they adhere to it. So I can get back to you on that.
Yeah, I think it's something that we should look at in terms of whether or not that can save us some money. If something's working, I don't really see the need to be replacing it just because it's on a schedule. Thank you.
Councillor Chapman.
Yeah, thank you. Again, in the report it says that the results of this audit showed many discrepancies in the asset database that have accumulated over many years. I was just wondering if there's a reason we're holding off till 2028 to do another full inventory and we're not doing it sooner.
So I have a number of different assurance topics that I have in kind of a rotation, and it just happens that I have time to do each one every 5 years. So if there is a desire by council for me to do it sooner than I could, I do want to make sure that they have time to finish completing the install of this new management module. It is quite time intensive because I have to go to every single location, and there was probably 3,000 assets that I had to go and check individually. So if I did need to do it sooner, something else would need to be bumped in the rotation.
And do we have a dollar value of the discrepancies that are mentioned?
I don't recall offhand. I did calculate it at the time. I can send it to you via email afterwards. Okay. At the time, though, the discussion with TIS was that most of the ones that were not in there were likely ones that had been dispositioned and just not removed from the database.
Okay, thank you.
So just on that, and thanks, Councillor Chapman, for asking that, because that was something I circled as well. Karine, I understand how with sort of all the audits you have to do, it needs to be part of a cycle, but is this something that actually IT could do and sort of flag a summary for you, and then you can decide then based on the information if you need to dig deeper sooner kind of thing?
So that was one of my original recommendations, was that they do cycle counts. So that is continuously counting like a location or a division. So they haven't done that yet because they are still waiting to implement this module. Once they have it in place, they can do those continual.
Okay, can we maybe just get a brief update from you after you hear back from IT during one of your other quarterly updates, just in terms of, can we sort of work that in with having them sort of do something maybe in, whatever year, 25, 26, and go from there?
Okay.
I know a lot's changed in the 30 years since I last was responsible for that, but I think it is something that the division should probably be able to help you with.
Yes. All right.
Okay,
That's
go ahead.
Right. That's it.
Is that it?
That's it.
Okay, wonderful. No further questions for Ms. Tasker? As always, you and your team do an incredible job. I guess the team being you.
My team of one, yes.
But do want to acknowledge and say thank you, and motion to adjourn. Oh, actually, no, not adjourn. Sorry, we're moving on to the next part of the agenda, and that is my poor friends from KPMG. That's not very nice. We were going to adjourn before hearing from you. Actually, we'll go right into dealing with them. So Matthew and Courtney, welcome.
I think Greg's on first.
Is Greg starting up? Okay, sorry.
Through you, Mr. Mayor, if you wouldn't mind, we do have a quick awards ceremony.
Oh, do you want to do that now?
Yes, please.
Okay. So we will go to item 5.1, and we are doing an award ceremony. So
We'll turn it over to Greg. So there's a certificate of achievement. We'll just let finance go ahead and present it and then do some photos.
okay, sure.
Sorry, are we doing the award now? Or okay,
Yeah.
so for the fiscal year ended December 31st, 2022, staff applied to the GFOA CAN-FR award for financial reporting, and we were successful in achieving the award. And so we have the award here.
Yeah, sure. Do you want to tell us a little bit about the award?
So the award is for excellence in financial reporting for municipalities that implement the best practices in their annual audited financial statements.
You guys coming up good?
Sorry.
Can you do one horizontally, too?
I'm sorry. Social.
Awesome. Thanks. Congratulations.
Thank you.
Congrats.
So thank you for having me here today to present.
Actually, sorry, just before you, when I did that award, so first of all, congratulations to staff. But this is not the first time we've won this award. And that, it sounded familiar. And in fact, when we received the plaque, took a look at it. And in fact, the city's been the recipient of this award in 2011, 2015, 2018, and 2022 previously. So I think this speaks volumes about the great team that we have at the City of Kitchener in terms of financial reporting, which is obviously due to the amazing staff team that we have. So kudos to all of you for the great work that you do, and I'm sure no doubt our auditors appreciate it as well, because if you do good financial reports, it means their job is a little bit easier as well. So congratulations. Okay, now back over to you for the next item.
Thank you very much. So thank you for having me here today to present the 2023 audited financial statements. Just a quick note before we begin. The city's consolidated financial statements, along with the statements of various consolidated entities, are included in Attachment B to today's report. Today we'll be discussing some of the key highlights of those statements, and in the coming weeks, the city's full financial report, including the financial statement discussion and analysis, will be circulated to the audit committee and also posted on the city's website. For today's presentation, I'll start by going over some reminders of how the audited financial statements differ from the budget variance reporting provided throughout the year. I'll then go over in a bit more detail one of the new accounting standards that became effective for the city in 2023 relating to asset retirement obligations. Then I'll provide an update on the city's key financial indicators as laid out in the city's long-term financial plan. And after that, I'll turn the presentation over to KPMG to have them present the findings of their audit. So in April, you received a staff report that presented the financial results for the year ended December 31st, 2023, specifically for the tax-based operations and the city's enterprises. The consolidated financial statements being presented today include the results of more than just the tax-based operations and enterprises. They include the various local boards that must be consolidated, including the Center and the Square, Kitchener Public Library, Belmont Improvement Area, and Kitchener Downtown Improvement Area. They also account for the city's 2 government business enterprises, Innova Energy Corporation and Kitchener Generation Corporation. Finally, they include the city's capital activity and activity in the city's reserves, as well as other adjustments made to comply with the Canadian public sector accounting standards. In 2023, there were new accounting standards that took effect for the city, including a standard on asset retirement obligations, which I'll discuss a bit further shortly, as well as several new accounting standards dealing with financial instruments. The new standards on financial instruments did not have a significant impact on the city's financial statements. However, they did result in a new statement, the Consolidated Statement of Remeasurement Gains, as well as several new disclosures in the notes. This slide is meant to demonstrate the difference in the annual surplus on the Statement of Operations in the consolidated financial statements compared to the operating results that were provided to you in April. The total operating surplus for the tax base and enterprises presented in April was approximately $5.8 million, compared to a surplus of $114 million presented in the financial statements today. The first contributor to the difference is the requirement to consolidate certain boards, as mentioned earlier, and to record the change in the investment in the government business enterprises. The addition of these items adds approximately $8 million to the surplus for the year. Further adjustments are then made to these combined results to have them reported in line with the standards set out by the Public Sector Accounting Board, or PSAB. Some of the larger adjustments required to comply with PSAB relate to the city's tangible capital assets, or TCA. For example, the recognition of revenue from contributions of TCA and an expense for amortization of TCA. And transfers from operations to capital or reserve funds and transfer from capital or reserve funds to operations are removed in the consolidation, as these are an expense to one fund and revenue in another. Taking all of these items into consideration leads to the annual surplus as presented in the consolidated statements of approximately $114 million. The next few slides will go over at a high level the impact of the new accounting standard on asset retirement obligations. An asset retirement obligation, or ARO, is a legal obligation associated with the retirement of a TCA. We have some examples on this slide of what types of costs are included or excluded from this obligation. And one thing to note is that the existence of an ARO does not indicate any current health or safety risks related to an asset, but rather it's an indication of future costs that are legally required to be incurred in order to retire the asset. One thing to note is that when an ARO is first recognized, there is both a liability created as well as an increase to the cost of the related TCA on the statement of financial position. This is because the TCA are recorded at cost, and the ARO represents a required cost of the TCA, which will simply be paid at some point in the future when the TCA is retired. This table is an excerpt from Note 2 to the financial statements and shows the impact of the implementation of the ARO standard on various accounts on the statement of financial position and the statement of operations. Kitchener applied the new standard using the modified retroactive approach, which means that comparative balances from 2022 were restated to reflect the impact of the standard. As you can see in the second row of this table, the largest impact was the addition of a liability of approximately $103 million as of December 31st, 2022. There is then a related increase to TCA of $36 million. And normally when an ARO is first incurred, the ARO asset and ARO liability would be the same amount. The fact that the TCA adjustment is lower is indicative of the fact that there's been amortization of these ARO assets that has occurred in the years prior to 2022. So the adjustment to accumulated operating surplus beginning of the year represents the accumulated amortization of ARO assets through January 1st, 2022. An important thing to note is that these figures are all based on estimates of future costs to be incurred, in some cases many years into the future, and there is significant uncertainty involved in these estimates. Under the standard, the estimates will be revisited each year and adjusted based on the most recent information available. This table is an excerpt from Note 15 to the financial statements and shows the breakdown of the ARO liability at Kitchener for the year ended December 31st, 2023. It also shows the continuity of the liabilities during the year. In the first row, under the total column to the right, you can see the beginning total liability of $103 million, which matches the previous slide. As you can see, the first column relates to future abatement of asbestos in city-owned or leased buildings. This is a common ARO for public sector entities. The second column relates to the retirement of underground fuel storage tanks, which is another typical ARO for public sector entities. And finally, the third column shows the ARO for the city's gas mains and service lines, as there are regulations stipulating the activities required to retire these assets. Next, I'll discuss some key financial indicators. The city's first long-term financial plan was endorsed by council in October of 2019. The plan includes 5 financial indicators that, when looked at together, provide a good representation of the city's financial position. For each of these indicators, we present both a 10-year trend analysis as well as a comparison with a peer group made of other lower-tier municipalities with similar populations. Please note that the comparison with peers in each case shows data from 2020 through 2022, as 2023 data is not yet available for most municipalities. The first indicator is taxes receivable as a percentage of taxes levied. The Ministry of Municipal Affairs and Housing has recommended a maximum ratio of 10% to remain in the low-risk category. As you can see, the city's ratio, the green line, has increased slightly over the past couple of years. Even with the ratio increasing, it's been relatively consistent over the 10-year period and remains below the maximum for the low-risk category as defined by the ministry. The maximum can be seen as the red line at the top of the graph. The ratio is still considered on the lower end of the range and is in line with where we have been compared to other municipalities. This graph shows the city's ratio, the green bar in the middle, compared to other similar municipalities, the average of which is indicated by the dotted line in the middle of the graph. As you can see, the city is right in line with the average of the comparator municipalities. The second indicator looks at reserve balances compared to total expenses. This gives an indication of how much money is set aside for future needs or contingencies. The ministry recommends a minimum ratio of 20%. The city's reserve balances have generally grown over the past decade, but as you can see, the city's ratio only rose above the recommended 20% minimum in 2019. The total reserves increased from 2022 to 2023, but the reserves to expenses ratio stabilized due to expenses growing at a higher rate. Total expenses for 2022 and 2023 are higher due to the implementation of the new ARO standard as a result of higher amortization expense. This graph has not been updated to reflect the new standard, as we did not have updated data for the comparator group. As you can see, the city is on the low end of the range relative to other comparator municipalities. The next indicator is looking at debt charges to total revenues, less donated TCAs. There is a recommended maximum ratio of 5%. So as you can see, the city is well below the recommended maximum of 5%. The city is also right in line with the average rate of the comparator municipalities. The next indicator we will look at is the debt to reserve ratio. The general benchmark for this indicator is a maximum of a 1-to-1 ratio of total debt to total reserves. The city's declining debt and increasing reserves has led to improvements in this ratio over the past decade. And for the last 5 years, the city has been at or below the benchmark for this ratio of $1 in reserves for every dollar held in debt. The city is slightly below the average as a result of the recent trend of increasing reserves and declining debt. The last financial indicator we'll look at today is the ratio of financial assets to liabilities. A ratio of 1-to-1 ensures that there are enough financial assets to cover all of the municipality's liabilities. Over the 10-year period, the city has maintained a steady ratio with slight increases in recent years. Note that while 2022 and 2023 ratios appear a bit lower than other recent years, only these 2 years have been restated to reflect the new liability for ARO. However, even with the impact of the new standard, the city's ratio is well above the recommended minimum target. The city's ratio has also been slightly higher than the average of the comparator municipalities. This graph has not been updated to reflect the new standard, as we did not have the updated data for the comparator group. Overall, we can see from the key financial indicators that the city has maintained a stable financial position. This has been accomplished through a combination of the city's commitment to sound financial management and fiscal prudence, as well as continuing funding support received from other levels of government. With that, I'll now turn it over to KPMG to present their audit findings, and we'll have some time for questions at the end of their presentation.
Okay, so Council, I'll hold the questions until we hear from our auditors as well. Welcome.
Thank you. Thanks, Greg. I'll wait for our presentation to come up. And will we be able to advance, or will we can? Oh, perfect. All right, so thank you for receiving us here today. The purpose is to present our audit findings. Following that, recommendation of approval of the audited financial statements. With me is Courtney Cheel, the senior manager on the account, and I clearly need a new picture. Mayor Guthrie would be proud of me. He always expects a joke before every presentation. As we move through the agenda, we'll just touch on a couple of matters here. We expect that committees had a chance to review our report, and therefore we won't do a page by page. But in terms of the audit highlights, we are in a position to complete our audit. We've done all the work necessary. When this report was originally drafted, we were continuing to work on a handful of things, and those are being wrapped up over the next couple of days. We're happy to report a couple of things that I think council or committee can take away from our presentation. First, we are expecting to issue clean audit opinions. That means there's no qualifications or modifications to our opinions, and this is what you would expect, and this is what would be normal course for most municipalities in the province. The second item is we're not reporting any items that remain uncorrected in the financial statements. So you may recall from our planning report back in the fall, we do our work, which includes tests, and we may identify items that need to be corrected in the financial statements. There was one correction, it was fairly minor, but after that, we do not have any others that remain to be corrected. So this is good news. What committee can take from that information is that the information that we were presented with at the start of our work did not need to be adjusted as a result of our work. So the books and records were in a clean shape when we got them. The third thing that we are required to disclose, and it's sort of, there's a slide in the back of our materials, relates to control deficiencies. We are required under the standards to identify and report any significant deficiencies in internal control for which we have not identified anything. So we kind of look at those three things pulled together and say, okay, what can I take from this from a high level? A, the books and records are in reasonable condition. Council and committee can then rely on the information that's being reported by staff as it comes from the system on a more periodic basis. And we don't have any significant recommendations with respect to internal controls. Sorry, I went too far. On this slide, we do provide a bit of update on some of the technologies that we use in our audit, and technology continues to be a significant component to the way auditors conduct their work. You know, some of the items here include one item called Data Snipper, which is an optical recognition tool that we use that compares documents that the city retains to the underlying accounting records. In fact, it just prevents a human from having to physically match up this number with that number. The machine does it for us, and then we can just review the outputs to make sure there's no outliers or things that don't make sense. We continue to use technology tools, including AI tools, to do analysis of large-scale classes of transactions, again, focusing our efforts more on risky or outlying information. I've already talked about the status of the audit. This slide deals with the auditor response to the risk that there could be an override of internal controls in the system. And this is referred to as a fraud risk, and something that we did discuss in our fall meeting. This is not unique to the City of Kitchener, but is required for each and every audit performed in Canada. As a result of this risk, we're required to have a response and think about how accounts might be intentionally manipulated to achieve some sort of purpose by staff. Reminding committee that this is not the risk that the city may be a victim of an outside fraud or an outside attack from a third party. And based on the work that we've performed, we don't have any findings or any adjustments. Cora?
Thanks, Matt. So I'll go over some of the area of focuses that we did in the audit. The first one is post-employment benefits. We focused on this area due to it being an estimate with significant judgment used by staff and their specialists. And our procedures we performed included communicating with staff's actuarial specialists, and we assessed the reasonableness of assumptions used, such as the discount rate and tested the appropriateness of underlying data, which includes employee populations. Through our audit procedures, we did not identify any errors. On this page, I'll discuss the obligatory reserve fund revenue and deferred revenue. This is an area of focus due to revenue recognized from development charge reserve fund is subject to judgment, as capital projects must be growth related in nature. The accounting for development charges is complex, as well as there's an added layer of complexity now since developers can delay payment. The procedures we performed this year was obtained staff's continuity and ensured it was accurate, and we performed testing over a sample of collections of development charges and a sample of capital expenditures that related to development charges and ensured they were growth related in nature. Through our audit procedures, we did not identify any errors. The next area of focus is asset retirement obligations, which was the most complex area that we looked at, as well as we spent most of our time here. This is a new accounting standard, as Greg mentioned, in which the city has to identify any assets that require decommissioning or remediation of contamination when the asset is sold. There is significant complexity within the calculation of the liability, as well as significant assumptions were used within the estimate. The main assets that required decommissioning or remediation were buildings that had asbestos in them, as well as gas mains and service lines when they are abandoned. The procedures we performed over this area of focus was that we obtained staff's accounting position over the new standard and ensured it was in compliance with the accounting standards. We also tested a sample of obligations to ensure they were appropriate and ensured the journal entries booked on initial adoption were appropriate. Through our audit procedures, we also didn't find any errors. The next area of focus is tangible capital assets, and this is an area of focus due to the size and the significant activity during the year. Our audit procedures included performing a sample over tangible capital asset additions and retirements, as well as testing the reasonableness of the amortization expense. Through our audit procedures, we also didn't find any errors. The last area of focus is financial instruments, which, as Greg also mentioned, is a new accounting standard. The new accounting standard concentrates mostly on investments as well as some added disclosure. With the new accounting standard, if the city has any investments in equity instruments that are traded on the open market, they have to record these investments at fair value instead of amortized cost. Additionally, if there are any investments with a variable return based on an equity index, these require some special attention. We reviewed staff's policy and memo on the adoption of this standard and are in agreement with how the investments were accounted for. We did not identify any errors through our auditing procedures. On the next page, this page we just disclosed that we didn't find any misstatements that remain uncorrected, as Matt mentioned. And on the next page, it goes into a bit more detail about the corrected misstatement we identified. This one had just an impact on the income statement, resulting in an overstatement of revenue and expenses, but essentially the error related to an internal order that was incorrectly settled. Next page, we just talk about control deficiencies, and as Matt mentioned, we didn't identify any significant control deficiencies during our audit. On this page is an overview of the new accounting policies and procedures. I won't go into any more detail about these as they were already discussed. And this page, we discuss the accounting policies and practices and note that they are appropriate. And we also didn't identify any management bias relating to estimates within the financial statements. And then the last page, we note that the form, arrangement, and content of the financial statements are appropriate for the size, scope, and industry of the organization, and that the accounting standards have been appropriately applied. The remaining slides are just the appendices, and those are for your information. But if you have any questions, we can take those now.
Just, sorry, before closing,
yep,
would like to thank Greg, Katie, Jonathan, and the rest of their team for the assistance and cooperation we received. Performance of an audit requires both the auditor and staff to work well together. And despite the efforts of our team, those by city staff are quite a bit higher. The number of hours required to get to this stage are significant, and we do appreciate that. So back over to the chair.
Wonderful. Thank you to both of you for the presentation and to our staff just before that. We do have some questions, and I'll start with Councillor Johnson. Just hang on a second. Go ahead, Councillor Johnson.
Thank you, Mr. Mayor, and thank you so much for your report. Thank you to our staff for the report as well. It's really telling that we're doing a really good job from what is in here. So that's kudos to staff and kudos to you. And I always appreciate an audit report which starts off with a chuckle. So thank you. If you could include that every year, that would be great. My questions are actually for staff. Is that? Can I ask staff now?
Yep.
Okay, great. Thank you. My question was around the slide that you had where our receivables are very close to the taxes that are levied, and that's pretty awesome. And then the next slide, and I don't know whether or not we would be able to pull that up, was one that was comparable to other municipalities, and I saw that there looked to be quite a discrepancy there with other municipalities, and I'm wondering if that's something that you can comment on, and then I probably have a comment after that.
Okay, you can save your comments till later.
Later?
Yeah.
Okay.
Thanks. So go ahead. Oh, yep, go ahead.
Through the chair, just to confirm, the slide is regarding taxes receivable to taxes levied. So on the slide showing the comparison with peers, it shows that Kitchener is actually in line with the average of the comparator group. The average is the dotted line going through the middle of the graph, and the Kitchener is the green bar.
Mm-hmm.
And sorry, was the question regarding Kitchener?
Yeah, it looks like there's quite a number of discrepancies on there. So my follow-up question would be, oh yeah, it is listed on there, what the percentage of tax increases. No, that's not what's on the other bar. It would be interesting to know if there's a correlation between tax increases and then what's actually received in other municipalities, but I don't know that you would have that information.
So this ratio is showing the taxes receivable to taxes levied. So it gives an indication of how our taxes receivable are developing in relation to the development of taxes levied. And we did have a slight increase in that ratio over the last couple of years, meaning that our taxes receivable have increased at a slightly higher rate than our taxes levied. That could be due to a number of different factors, including economic factors resulting in difficulty of taxpayers paying their tax balances. Staff continue to monitor the ratio, but as noted in the presentation, we are below the low-risk thresholds as set out by the ministry, and so we'll continue to monitor it.
Yeah, I mean, we're doing really well. It would be interesting to kind of know, in terms of tax increases, how we do with other communities. Thank you.
I think Mr. Lautenbach wants to add to that.
So through the chair, this comparison is really just a peer group that we selected that are similar size, but when you look across the province, we are still under the low risk scenario on all of our indicators that the province actually measures us by. And that's different than, other municipalities are actually in the medium range. And so I think it's important to point out that although, it's gone up slightly in terms of this indicator, it's still not a cause for concern. We're still in the low range. And so I think that's the key message when you're looking at this indicator across the board.
Okay, thank you. Councillor Davey.
Thank you, and I agree with Councillor Johnson on the joke at the beginning is great. As a matter of fact, Matthew, if I were you, I'd actually, instead of updating your photo, I'd just keep making it younger and younger every year until you get the high school photo. That'd be awesome. I have two questions. The first one is actually with respect to the post-employment benefits. I was happy to see that we had a bit more attention this year. I'm not sure if it's appropriate to ask in this forum, but is there any, I noticed that everything, we seem to be in line. Is there any concern in terms of trending that you've seen with respect to us or other municipalities with post-employment benefits?
So if I may, we haven't noticed any trends. We do see post-employment benefits increasing over time. This is primarily due to sort of aging workforce, as well as healthcare cost trend increases. We are seeing now actually a little bit of a moderation to the liability balances, but that's really only due to interest rates. So historically, if we go back 3 or 4 years, those benefits would have been measured at a very low interest rate, and as interest rates go up, the liability actually comes down. So it's a bit of a false moderating, but that's due to change over time. But nothing struck us as out of line or overly concerning. I do know there is a sensitivity with respect to WSIB benefits, especially with respect to presumptive liabilities for firefighters, and that's something that staff continues to monitor.
Yeah, that was an issue early in previous budgets. Thanks. Actually, before I forget, Mr. Mayor would like to move this item as well at the appropriate time.
Okay.
And my other question is for staff, and that's with respect to the debt to reserve ratios. We have the Southwest Park coming up, which is a huge item. I'm assuming that our DC reserves are all included in this. So should we, I'm not sure what our total amount of reserves is, but should we expect significant deviance in the next couple of years with respect to that project?
Mr. Lautenbach, or?
So through the chair, we will expect to see our ratio will go up as a result of issuing more debt for the Kirk project. I think what's important to note is the debt charges to total revenue indicator. We actually expect will still be below what that threshold is. That's identified as low, even with issuing that additional debt. So we will see it go back up. Our trend of going down in terms of debt, we'll tick back up with that, but we'll still be in that low range in terms of the overall debt charges.
Okay. Yeah, so there'll probably have to be some explanation of that in future years because it should be recovered through the DC charges. But okay, thank you very much.
Okay, Councillor Singh.
Thank you, Mr. Mayor. Just to get a little technical, if he doesn't change his picture, Matthew, it will technically continue getting younger and younger, albeit with very little change, though, so or noticeable difference. No real questions to you guys. Thank you for the thorough report. I think we are definitely killing it. It'd be good to get a sticker of good achievement from the auditors, but we'll take your word for it that we're doing all right. Quick question to staff, Greg. If you could bring up the slide for I think it was assets to expenses.
Go ahead.
Through the chair, was it financial assets to liabilities?
Financial assets to financial liability, sure. I think that was. Just one before, just a bar chart with comparison with our peer municipalities. Financial assets to liabilities. Yeah. So obviously we're in a good position without a doubt. Where it was a bit of a surprise looking at like Waterloo or Burlington, the fact that we, as a municipality, own 2 golf courses, which they have asset value of their own. We have our gas utility. We're only one of 2 municipalities in Ontario that owns that asset, and that has, hundreds of $1 million value. And then additionally, we have a significant ownership still in the Hydro LDC in our ownership of ANOVA at the moment. I mean, shouldn't our delta be significantly higher compared to like Burlington or Waterloo?
Through the chair, so this ratio includes financial assets only, meaning